So we turned major bearish, and we had to put up with a lot of complaints because most of the public wasn't willing to go bearish then. And we said, no, be gone. Well, sure enough, gold labored. After it made its high at 1920, it dropped down into the high 1500s at some point, and then lived between that level and the upper 1700s for the next year. Kept trying to go back to its high, but couldn't. So it wasn't sideways action. It was sideways action after a peak. But it had broken already 3 months off the high, its annual momentum trend. Same in 2015, when it made its low in December of 2015 at a price of $1,050. 2.5 months after that low, actually a month and a half after that low, in mid-February 2016, MSA went long-term bullish again because we had broken annual momentum trend structure to the upside.
Michael Oliver begins by reminding us that the bull trend in monetary metals, gold, silver, and miners, began in earnest around the 2015 lows. Since then, gold has generally led the way, with silver and the miners behaving more erratically. Their participation has been intermittent, at times enthusiastic, at others sluggish. But all that is changing. Oliver highlights that this seemingly uncoordinated movement is actually a feature, not a bug, of long-term bull trends. It's normal for lagging participants to catch up dramatically, and often unexpectedly, once momentum shifts. To demonstrate this, Oliver suggests viewers pull up a 10-year weekly price chart of silver and do something very simple yet revealing. Draw a line across the highs of each year from 2022 through 2024. What emerges is an ascending ceiling, a line that silver has tested multiple times but failed to break through. That resistance line has now been decisively broken, not only on a momentum basis, which Oliver's MSA monitors closely, but now also on a price basis.
I think we're in an acceleration phase now in silver. In other words, the bull trend has been going on since the lows in 2015 for gold, gold miners, and silver. Silver and the miners have been somewhat irregular participants in that ongoing monetary metal bull trend. But I'm going to suggest to your viewers that they punch up a chart on their quote screen, just not momentum, what we look at, which usually tells us ahead of time. So look at a simple, stupid weekly price chart, and go back 10 years, and draw a line across. Go back to 2022 anyway. Remember 2022, that's when silver had a plunge and gold had a plunge. Gold dropped from over 2,000 and dropped down to the low 1600s. It's a 20% correction, actually, for the only one it had in the whole bull trend. And silver had a nasty pullback. It got down into the $17 level, I think. Plot that weekly price chart, and when you punch it up, draw a line across the highs of the last several years, so 22, 23, 24, and into this year. And you'll find you can connect a whole bunch of peak weekly price closes, and there's an uptrending line across those highs, meaning it defines the ascent of silver. And it's hit that line 1, 2, 3, 4, 5 times over the last several years, where it hits that line of ascent and bumps its head, and then you get a pullback. Nevertheless, it continues up. That line of ascent pretty much defines what's going on in silver. It's going up every year. Okay. Yeah, there are pullbacks, there's pauses, et cetera, et cetera. Well, our momentum work in early June, so 5 weeks ago, let's say, told us we're going to accelerate now. In other words, we're not going to follow some prior line of ascent that everybody's used to. Price just joined in last week, and if you plot that line, you'll see that last week's action punched through it. In other words, if that line was a ceiling, an ascending ceiling of resistance, even price now says, I'm out of here. Okay, you blew through it definitively. And, and pullback this week isn't even threatening that. In other words, we've accelerated the market. And I think what's about to happen over the next 5 or so months is likely to be the kind of strength that people aren't used to. And therefore, they'll probably doubt it all the way up, like, oh, this can't be. Uh, I think we're headed into a period of ascent for silver that is far more demonstrable, far stronger than gold on a percent gain basis. Same is true with the gold and the silver miners. They have now, when we measure their spread relation to gold, or we measure silver spread relation to gold, we're getting breakouts saying, hey, we were sleepy for a while. Now we're going to beat you, Mama Gold. And I think you should put your seatbelt on because I think the next 5 months or so will be quite interesting. People doubt that because they're so accustomed to what they've been taught by silver itself. Its behavior pattern it's been embedded in investors' minds. Well, this happens to many markets, whether they're in a bear trend or a bull trend. They may suddenly at some point in the trend say, hey, enough of this. I'm going to move more quickly, whether up or down, in this case up. And I think we're going to be probably in the $60 to $70 zone in the next 5 months or so. Okay. Now, and that's not the end of it. I don't think we're going to end the bull market in gold and silver like we have in prior peaks, like in 1980 or 2011. I don't think that's what's coming. I think what's coming is so many institutions, assumptions, and markets will be turned asunder that we're going to end up with monetary metals being money yet again. And I think it's going to pop up here, here, this country, that country. And already in the United States, there have been several states that have not just not taxed gold and silver transactions, but have made them legal tender. Florida has done it. Texas has just done it, where they're in effect telling the central bank of the government, you don't have monopoly control over money anymore. We just legalize gold and silver as legal tender. You can pay your taxes with it. So in other words, they're in effect seceding from the national monopoly control over the money unit, which is of course an unbacked piece of paper. They're replacing it with, that kind of process is underway in its infancy, and it's going to grow more rapidly, especially as we see an economic downturn, which I think we're going to see, and the stock market trap people. I think it's been topping actually for a couple of years, where it'll make a gain, have a sharp pullback, and make another gain, but it isn't sustained, and another drop, et cetera. I think there's distribution going on, and I think the market is topping. And when it tops and goes down, that's when you see the data points go awry, to the point where the central bank pulls their hair out and the central government does the same, and they have to go to monetary excess, which we know our current president is all in favor of. He's told them, get rates down to 1%, whatever. That is going to further pave the upside for the monetary metals.
Many investors get shaken out during minor pullbacks or false tops. Oliver warns against this behavior. His momentum work, including long-term tools like 3-year and 3/4 average oscillators, shows no sign of structural topping. There's no indication we're near a long-term peak in gold or silver. In fact, the opposite is true. We are well below any momentum breakpoints that would suggest a bear market. For Oliver, these long-term momentum structures are like fault lines. Once broken, they tell the truth about the trend. And right now, nothing's broken, except resistance to the upside. Oliver also draws a contrast with the stock market, which he believes is undergoing distribution, a topping process that is not sustainable. Equities may appear strong on the surface, but under the hood he sees a market on the edge of collapse. As the equity market weakens and the economy slows, the Fed will be forced back into monetary easing. The current administration is already signaling that it wants interest rates cut back to 1%. That kind of monetary excess will only pour fuel on the precious metals fire.
Been virtuous because what it's allowed to happen is, while gold has gone sideways since April, so we're now 4 months of this going nowhere. It's not a top. Gold never tops going sideways. Go back and look at the 2011 peak. Go look at the 2015 low. It doesn't top going to sleep. When you see gold go into a range, it's a launch pad for another move. But during the last 4 months, since gold peaked in April, May, June, July, it hasn't gone down, it's gone this way. Every time the bears think, oh boy, it's on its way, goes right back up again. That's a launch pad. But during that time, what's happened? Silver and the miners have gone vertical, meaning the spread relationship between the silver and gold and the miners in gold has firmed sharply. Why? Not because gold's gone down and they've gone down less, but they've actually gone up while gold held its own. So the spread is firmed, favoring the miners and silver. And I think it's lovely what's been happening, because the quietness in gold again has put people to sleep thinking, well, nothing going on here. Yeah, it is. Take a look at a SIL chart, silver miners, go back 5, 6, 7 years. Look at a GDX chart, go back that same amount, just price chart even. Price is now saying what momentum has already told us is going to happen. We're going back. I think GDX and SIL, for example, those two mining ETFs, the 2011 highs will be blown out with ease in the next 5 months and exceeded dramatically. And I think it's underway. It's going to be more vertical, though, than what they're used to for the last, for the last 10 years in gold, which has been a layered process. I think it's going to be far more vertical, which is going to surprise them. And yeah, there will be pullbacks, but they'll be sharp and over with quickly, and they won't be as deep as some of the other pullbacks we've seen. That's what I think is about to unfold. And his question again was
where are your
sell points. Oh yeah, I about chuckled. Pardon me. When we look at long-term momentum, such things as a 3-year average oscillator, where we oscillate the price of gold versus its 3-year average or versus its 3/4 average, long-term yardsticks. We're not even near any numbers that would say, oh, it's over. On short-term basis, you could always get sell signals here and there, but they're like, you get out at every sell signal, you're unlikely to get back in time. In other words, yeah, it's a trader's thing. You might drop for 2-3 weeks, but if you don't get back in 2 days later, it's back at the highs. You know what I mean? We've seen this repeatedly. We're not near any long-term momentum structural breakage points. Now, when we go back and look at peaks and troughs and go major lows and major highs in gold through history, going back to 50 years that it's been legalized, when it makes a high and turns down, it breaks structure very, very soon after making the high. Example, MSA turned major bearish on gold in January of 2012. It was only 3 months after the high, okay? And when you made your high in September, October 2011, and you dropped some, didn't do anything on a price chart, but for annual momentum of gold, it said, uh-oh, you just broke the backbone going back quite a few years on the momentum chart. So we turned major bearish, and we had to put up with a lot of complaints because most of the public wasn't willing to go bearish then. And we said, no, be gone. Well, sure enough, gold labored. After it made its high at 1920, it dropped down into the high 1500s at some point, and then lived between that level and the upper 1700s for the next year. Kept trying to go back to its high, but couldn't. So it wasn't sideways action. It was sideways action after a peak. But it had broken already 3 months off the high its annual momentum trend. Same in 2015, when it made its low in December of 2015 at a price of $1,050. 2.5 months after that low, actually a month and a half after that low, in mid-February 2016, MSA went long-term bullish again because we had broken annual momentum trend structure to the upside. Right now, we're not even near any breakage levels. And when gold makes a high or a low, what happens is the momentum structures move up to where they're very nearby the action, so that when it breaks even modestly, it's got something to break of significance. We don't have that now. I'm not fearful of a top in gold.
Please like and subscribe.